Welcome to the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with Matt Naimoli, the co-founder of G&amp Insurance, a provider of auto and home insurance lines. Welcome to the show, Matt.
Well, thank you. Appreciate it.
Matt, you grew your company's revenue from $1.4 million in 2014 to $3.3 million in 2017, a 144% increase. Before we talk about how you grew your company so fast, can you briefly share what your company does beyond my quick intro and how your company differs from the competition?
Sure. Yes. Briefly speaking, we're an insurance brokerage. So we help consumers find the best home and auto insurance plans, almost like Kayak.com for flights. We do it for auto and home insurance. So we go out and shop 20 different insurance companies, and we find the best fit for product and price for our consumers. That's really like what we do, and what separates us is really our niche focus, the focus that and we'll probably jump into this more later, but our focus on at what point in the client life cycle does it make sense for us to be introduced, and the proactive nature of our research and communication to our clients is different from the industry standard.
Well, why don't we jump into that now? How are you doing your business differently than your competitors?
Yeah, so there's two kind of different forms of differentiation. And the first is what we're known for and our brand. And I think it's really challenging, especially today with all the noise, to really differentiate and kind of create a storyline and a brand that consumers and clients and referral partners can associate with or think of when they think of whatever product that you offer. And in our sense, what's really worked for us over the years is to be hyper focused in on a niche, and our niche is home buyers. So we sell home and auto insurance, but we really focus in on individuals who are purchasing real estate. That is the moment in their life we want to be introduced. They need insurance at that moment to insure the new property they're purchasing. They all have vehicles for the most part. So we're introduced to them by their lending loan officers, realtors, attorneys, the trusted advisors that are in their world, helping them get to closing. And we're their insurance arm that helps insure the property, their cars, umbrella, and other lines that they need. So really by hyper focusing on that moment in the client life cycle, we separate ourselves from other agencies. And there's 35 or 40,000 agencies in the country, but there's very few, if any, that design their entire business structure, people, process around that one moment in the client life cycle. Most agencies are generalists, and they will love to insure anyone and everything. We've been very careful at making sure that our brand and our process is really catered to the home buyer, and that's it. So if you have a $1 million insurance policy that you pay every year, and you have 1,000 employees, you're a massive company, a Fortune 5,000 company or something, we're not your fit. We're not going to be you're the best option for you. We might have the products for you, but we certainly don't have the expertise and the experience in the process. We know what we're best in the world at, and that's helping home buyers get to closing. So that's really kind of the key to success on the differentiation side, when it comes to what we're focused on and where we're headed. The other piece is the service side, the actual engagement, what the experience looks like for the client. And just briefly said, like, our industry is very reactive. If you have to deal with insurance, it's probably not a good reason. You either have to pay for a bill, or you're filing a claim, which is unfortunate, or you need to make changes. And so most insurance companies do a pretty good job at when you need them. They'll answer the phone and they'll help you with what you need, but very few, if any, focus on doing proactive research and communication, whether it's pre-renewal, like before your policies come up for renewal, engaging with you and having really strong conversations about risk management, basically essentially just managing your risk moving forward, making sure you're with the best insurance company that year, making sure nothing in your life changed, things like that. And most insurance companies just don't ever focus on that component of it, just because of capacity, because of bandwidth, that's how it's always been done. And so we found a lot of success with improving and increasing retention and referrals through making sure that level of service is at a whole nother stage, whole nother level.
Right. Now, when you said before you're helping home buyers get to closing, can you be a bit more specific as to when you enter into the discussion? Is it,
Yeah.
before?
Yeah,
Yeah.
when a home buyer, when someone's looking to purchase a property, they have to put an offer on the property, right? And they use their realtor to do so. They've probably been pre-approved by their lender, and maybe they talk to their attorney a little bit about the property they're considering. They put an offer. The seller might go back and forth. They accept the offer initially, and then the P&S, the purchase and sale agreement, is signed. At that moment, when it's signed, the realtor really hands that relationship off to be managed by the lending institution, the lender, the loan officer, the processor, and they're the ones that say, okay, we need your W-2 statements, we need proof of income, we need all types of documents and forms in order for us to clear your loan to close in time for the sale. And one of those elements, one of those things that they need is an insurance binder, which is essentially a one-page document that says, John Smith is purchasing 123 Main Street and they have insurance effective on this date, so that if the house burns down the next day, the bank knows that it'll be rebuilt to its initial standard by the insurance company. And that's why the insurance is an essential component of the buying process, which is why we've managed to build hundreds, if not thousands, of relationships with lenders and realtors and attorneys as really the go-to resource on the insurance side, so that there's no hiccups or issues that might fall through the gaps.
Now, what kind of hiccups can fall through the gaps? I'm not super familiar with this process that you have outlined. I mean, can't I just find an insurance binder anywhere?
Yeah, so I mean, for the most part, 50 or 60% of the time, probably be okay. Like, you could probably call whomever you have your car insurance with, and they could work on it. But what we find is that whoever they're working with, traditionally, it's just not their forte. It's not really their focus, not necessarily what they want to be doing. And a lot of times you call an entity to file a claim, and the same person that's filing a claim is handling service transactions and also issuing new policies. And so it's not really at the forefront or top priority. And so what happens is that in these transactions, time is of the essence. Like, you can't have bottlenecks, and the more bottlenecks there are, the more pain there is, and the greater likelihood of deals blowing up because specific timelines are not met. And so speed, convenience, accessibility is critical. And a lot of times, if someone just calls up whoever they have insurance with, it might take a couple days to get quotes. It might take 3 or 4 days to get an insurance binder. It might find the processor at the bank might find out that the binder is completely incorrect. The mortgagee clause isn't listed. The loan number is not right. The formatting isn't correct. And they might have to go back and forth for days to get that done. It's not always the case, but it happens enough with high volume lending institutions where they really value speed, convenience, accessibility. It's much more about taking a C- experience and moving it to an A+, and that being our value proposition, versus you can't go get insurance unless you work with us. You know what I mean?
Yep. So the insurance binder is really a short-term policy, but you already have the relationship now, and you just roll it into an ongoing insurance policy.
We write their home insurance, and we send the binder to the bank. We write their auto insurance because it always makes sense to combine, almost always. We write their umbrella policy, which extends above and beyond. And sometimes we write the life. If they're a small business owner, we'll help them with that. And the flood insurance and other things that might need. And that's the other piece. Like, flood insurance sometimes is required now for the purchase of the property. And last thing you want is to get to closing and find out that that the bank required flood insurance and no one found out that they needed it until the last minute. And so, yeah, I mean, the introduction is made at the home purchase, but our relationship with our client goes for years and years and years. It's just that's when we want to be introduced. That's when the client's most sticky.
Right.
They're trying to protect one of the most important assets of their life, and they're trusting us to do so. So that's a much stronger relationship, a stronger way to start a relationship than someone buying their first car when they're 22 or renting their first apartment.
Yeah, I mean, I have to say, for me, insurance is a commodity product, and my car insurance. At one point, I used to take the time to see if there's a better deal out there, and yeah, I would appreciate it if someone else did that for me. But after a while, I kind of stopped doing that because I wasn't able to find a better deal than what I already had. I just kind of just pay the bill now as opposed to shop around.
Yeah, I think, I think the big brands like Geico, they spend billions of dollars at commoditizing the product intentionally. They look at it as, okay, well, we'll pound it in everyone's head in the country that this is something that you have to have. Just don't overpay for it. And unfortunately, the consumer is what we found. Most people have no idea what type of protection they have or the significance of their protection. And when they're buying property, it's kind of brought to light the importance of this type of protection, because they're thinking about, oh, wow, like it's not just when I'm driving around and my car gets damaged. It's, if I have a pool and my children, if my children's friends are over and they fall into the pool and they hurt themselves, or trampoline, or if my house burns down and all my stuff is destroyed, and all these considerations that they've never really had before. So it's a good moment to really educate people. And that carries right into the auto insurance. It's like, that's part of the conversation. It's like, if you're driving down the street and you hit somebody by accident, it's not your fault, but like you rear end somebody and you're found at fault by the insurance company, and they're a dentist and they can't work for the next 30 years because now they can't do their operation. Well, what's happening? Well, they're going to go after your policy, and most insurance policies don't have enough protection. And if it doesn't, it falls on the at fault party, the driver, you. And what happens? Well, you don't have the assets to fork over. Your wages for the next 20 or 30 years are garnished. And that's how it happens. And unfortunately, it doesn't happen frequent enough that the public is really brought to light of the importance. But when it does happen, it's catastrophic. So not to diverge, but that's the kind of importance of the stuff we're doing. And so we need to make sure that we have a moment in the life cycle of the client where they are interested in learning about the importance, not just saving money.
Right.
The money savings thing is automatic. We write for 20 insurance companies. We're always going to find a very competitive policy and package. We're never going to overcharge someone. But 1 out of 10 people have an umbrella policy. 10 out of 10 people should have an umbrella policy. It costs $10 more a month, $20 more a month for $1 million in liability protection. And 80% of people don't even know what that is. That's the issue that Geico has created for the general public.
Right. They have the marketing dollars to spend, right, to get that message out. Yeah. Now, you kind of touched upon this already, but maybe we can revisit the ones that answer this question. But when you grew your sales from 1.4 million in 2014 to 4 million around 4 million in 2018, what were the drivers of this growth? The 3 drivers of this growth?
Yeah, the number one thing is relationships. I mean, in today's day and age, everyone's talking about technology, everyone's talking about automation, everyone's talking about AI, everyone's talking about lead generation, digital, Facebook, everything. And we are big into all of that. We are certainly very focused on leveraging software and technology to make the client experience better and simplify and speed up the internal processes that the agency runs on. However, it does not take the place or substitute the power of the relationships. And in our business, the thing that's always fueled our growth has been high quality referrals, not just leads for lead's sake. Most leads that insurance companies get, they close at 3 or 4%. We close at 71%. And it's because the qualified leads that come in the door are coming from trusted advisors within your niche. So the reason why we were able to really move fast is that we just continue to pound our niche. We're really focusing on the home buyer sphere. And the top loan officers, the top realtors, the top attorneys in Massachusetts and New England got to know us. We spent time with them. We figured out what their pain points were. We figured out what their business was like, how they got business. We asked them tons of questions. We went out with them. We connected. We became friends. We strategized on helping them grow their business and invested in them in terms of introductions that were strategic for them to help them move forward. And in return, we got their business. They refer all their clients to us, or a majority of them. And so, this year, for example, we'll insure 6% of all the homes purchased in Massachusetts. And that's a big number. And the only reason we're going to get there is because years and years of compound effect from relationship building. And I think that's an art. The networking, people talk about networking all the time. They say, hey, you got to go network, you got to go build relationships. But there's very limited resources out there when it comes to educating sales professionals or business owners on how to best network, the process, the steps 1 to 7 on how to actually go from, where you are now to having 800 or 500 referral partners that love referring you, because those referrals are such gold. These aren't shoppers. These aren't people that are calling you and calling 10 other places. They're trusting you, and that's really what's been able to fuel our growth and continue to move the company forward.
Okay, so number 1, relationships. Is there a number 2 and a number 3?
I mean, for us, culture has been really important, because what we do internally is certainly going to reflect externally with our clients. Our retention is super high with our current clients, and a major reason, obviously our process is sound, but our people are just exceptional. And we're really careful about, making sure that we are surrounding ourselves with people who are fitting our core values. We have 3 core values that are, we have fun together, we do whatever it takes, we find ways to help. And if you don't fit those 3 core values, you're just not a good fit for the team. It doesn't mean you're not a good person. It just means you're not a good fit for G&amp. And we safeguard those. We protect those like our family. And as a result, we only surround ourselves with really solid people looking to help one another, who enjoy having fun and do whatever it takes for the client and their colleagues. And that reflects really strong positively on our clients. It really does cascade all the way through. We were best places to work in Boston by the Boston Business Journal 2 years ago, and that was probably the most proud moment we've had, is because it was not one of those like you can just send in money and win an award. It was literally voted by all the employees. And so I think that's a big piece of the success, is that we've been able to surround ourselves with great people with core values that share our own.
Okay, so number 1, relationships. Number 2, culture. So would you wrap people into this number 2, or is there a
I think people and culture is a synonym.
Okay.
Yeah, I look at those as synonyms. I think culture is just a reflection of the people you have. So okay. I think those are the same. If there's a third, our partnership, Zack and I are 50-50 partners. And, I think that partnerships can be really challenging. I think that we have certainly had our challenges, but, and a lot of times partnerships don't work. We know the statistics behind that, both in personal life and marriage, as well as professional speaking with businesses. Our partnership is very strong. It's founded in constant communication, deep levels of respect, and a shared vision. And I think those are the 3 things that really fuel our partnership, so that it becomes a 1 + 1 = 5. It's not a 1 + 1 = 2. In some cases, it's a 1 + 1 = 1.6. In our case, it's 1 + 1 = 5. And we do a good job at making sure that we separate our responsibilities. We both are very passionate. We both are enthusiastic and optimistic for the future, but we both have very specific skill sets that distinguish one another. And we make sure that we align our activities and responsibilities and accountability within the company to our skill set. And we make sure that we're constantly, talking to each other and keeping each other up to date, but we're not making every single decision with one another. That just wouldn't be efficient, wouldn't allow us to move quick enough. So if those are the 3 things. I think relationships is definitely number 1. That's been the top of the funnel, right? Any business needs the top of the funnel is strong, and that's relationships and strategic referral partnerships, to be exact. Number 2 is our culture and our people, and number 3 is our strength of our partnership.
Right. So what do you do, and what does Zack do? How do you guys separate that up?
Yeah, I mean, we're both for many years, we were both creating new relationships, new strategic referral partner relationships. So we still maintain a lot of those relationships. We still, on a weekly basis, we have our own personal scorecard where we need to make sure we engage with our top 20 referral partners, because they're generating 70% of the business. That's the way it is, right? And so we make sure that the 2 of us divide and conquer, and We stay top of mind with these people through phone calls and DMs and LinkedIn messages and in-person coffees and strategy meetings and goal setting lunches, et cetera. Just whatever it takes to make sure that relationship is super strong and we're top of mind. But where we separate is that Zack is more in charge of the marketing department. He and I are both doing a lot of things when it comes to marketing, creating the content, going out to seminars, doing a lot of presentations, et cetera. But he's the one who's actually managing the marketing team. So the content calendars, the strategy behind our story brand, making sure that our consistency is in place. If we need to hire, we have a full-time videographer on staff. We have a full-time editor. We have a full-time social media strategist. Like, these are positions that are typical in an ad world or a marketing world, not typical for an insurance agency. Probably the only agency in the country that has a full-time videographer on staff. And it's because we really believe in the power of social media, the power of video at combating locally any other entity. Geico can't compete with us locally because we are in the news feed of who we want to be in. We can target market the specific individuals who we want to see our brand every single day. And so he's really in charge of making sure that moves forward, and he does a phenomenal job at it. And I'm more in charge of growth. So I'm more focused on managing our sales team, which is essentially managing our sales manager, our outside sales teams that are a little bit different than the inside team, our business development manager. So really growth, increasing revenue, increasing sales, making sure that our strategy is in line and we're hitting our metrics on a weekly basis that line up to our annual goals. Service falls under Zack as well, and our service manager runs up to him. So we just try to separate ourselves a little bit from one another when it comes to some of the decisions that need to be made. But anything that's big, any strategy or vision related stuff, or things that incorporate and impact the entire team, we're both going to be involved in. The other piece is that we have a really strong leadership team. Our leadership team is an extension of us, and really they're the ones that allow us to elevate out of the business and really think about next steps and what type of strategy we need to impart. Right,
got it. So for back to relationships or strategic referral partners, can you share a bit of details about the art of your relationship building and how you go about networking, and maybe share a little bit as well about how an insurance broker can be helpful to a attorney? I'm not quite sure seeing how you can help, how it can be a two-way mutually beneficial relationship. So you can shed some ideas on that.
Sure. Yeah. So first, before I forget, we, if it's helpful to you and any of your listeners, we also we run a podcast called Bobble On. Bobbleheads. We ran into Bobble On was our slogan for a long time, and really all that it's focused on is this topic. It's really helping networking strategy, helping generate new business through referrals and relationships. And so we go in depth every week on that stuff. And so if you ever want to listen to it, it's something that you might be able to take and apply later on. But to go be more specific, I think too many professionals in all industries think about networking and referral partners as two-way street. And just what you just said, like a two-way street. Like, if they're going to refer me, how do I refer them if I'm referring 100 other people? Like, wouldn't I just go be a loan officer? Why would I still be in it? How can I possibly do that? And that's what keeps people from expanding and scaling networking. And what we realized over the years is that we were just looking at it early on. We were looking at it the wrong way. We were looking at it as like, we thought what we knew was value to them, opposed to really identifying and questioning first. So our first step in the process is really identifying who we want to be. And this is what we coach a lot of our clients, a lot of agency owners that we talk to, and we speak across the country at different conferences. And we talk about this. It's like the first step is making sure that you know who you're going to go target. Like, too many people just go out and network and try to say, hey, here's who I am to everyone and anything. It's really important to be targeted right off the bat, because not every relationship is going to be equally important or valuable to you. If a realtor is doing one deal a year versus a loan officer who's doing 600, and you care about quantity, you need to focus on making sure you spend time with the 600. And so I think it's an obvious statement, but it's something that many people miss. So first off, is identifying who you really want to go target for partnerships. And the second is determining really what's a win. What's a win going into this meeting with this individual? Assuming you secured a meeting, a coffee, a lunch, or whatever, and there's specific strategies on how to best get that meeting and get that coffee, what I won't go into now. But assuming you get that meeting, determine what's a win before even going into the meeting. Get your mindset right. Too many people just go right in the meeting, so excited to meet the other person, so excited to tell them about themselves and how they can help and blah, 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 that they don't understand. They don't walk out of the meeting at the end saying, yes, I capitalized. I know exactly what I was going in to do, and I won. So getting that mindset right off the bat. Then it's a matter of mastering the meeting. And it's an art form, but it's also a process. And I think this is where there's really no training and education out there, is how to best run a one-on-one meeting with a new potential referral partner, no matter what industry you're in. And it's interesting, what we did for the first couple of years is we came in guns blazing. We really came in saying, here's who we are, here's all the value we offer, here's our speed, here's our carrier access, here's our pricing model, here's all these things. This is why we can really help you. How does that sound? And by the end, like, they're stonewall. They're exhausted because we've been talking for a half hour, and there's some back and forth and yada yada. But then you leave the meeting, you're like, I think that went well, and you don't get referrals, or you get one, and it might be it. What really changed the game for us is leading with questions, leading with interest, really figuring out, what does this person see as value, and can I then go and accomplish it for them and offer it to them, opposed to assuming anything. Dead aid is the last thing we go into meetings with. Now we have 8 to 10 questions that are strategically positioned to make sure that these people are really, we're uncovering everything about them, the pain that they might have in their business, how they get their leads, where they get all their business from, what they would love to do more of if they had more time. What would they punt tomorrow if they could, but they just can't seem to do so? What they do for social media and marketing, how they drip on their existing clients, so on and so forth. All of this is uncovering what's important to them, what their world looks like. Because if then you can position by removing pain or creating opportunity or making strategic introductions, you win. And the last piece is just creating agreements. So if they've told you exactly what works, what they love, what would be really helpful to them, what their pain is, and then we've positioned and said, if we do X, would you consider working with us moving forward? They're going to say, absolutely. You're going to do something for me to help build my business, maybe a strategic introduction or a workshop on how to better manage process design or team building exercises, or you're going to come in and talk to my team about culture, whatever it might be. Who knows? We're unemotional about it. They're going to tell us what matters. But if you're going to do that for me, of course I'm going to introduce you to my clients, because no other insurance agent is doing that for me. And so that's how we've secured so many relationships and been able to scale, opposed to just being, you're my guy, I'm your guy.
Okay, so can you share how you can help an attorney?
Yeah, so in Massachusetts, attorneys are critical in the closing transaction. So there's a separation between the title work and the actual closing. Every state's a little different with how they do that. Attorneys in our state, all their business is driven by real estate agents and lenders. Well, all of our business is driven by real estate professionals and lenders. So it's easy for us to position strategic introductions. Because if I meet a new attorney, and a new closing attorney, a real estate attorney, and I say to them, hey, Jim, I might come across 4 deals this year. I'm happy to refer you on one of them. Great, thanks, Matt, awesome. But if I go to Jim and say, Jim, I know 1,000 real estate agents, hundreds of loan officers. I do workshops across the country specifically for helping these types of individuals win. I've got programs for realtors that no other insurance agency does. I can help, tons of different people. Would that be of value to you if I made some strategic introductions? Because if I introduce you to a strong real estate team that you don't currently work with, who do 50 to 60 transactions this year, and you get half of them, that's 25 versus the 1 that I could have offered that I come across randomly. So with the attorneys, we do a really good job at making sure that we introduce realtors and lenders to them and be the connector of sorts, which strengthens that relationship all in all.
Right. Now, how does it work time-wise for you to do the connections? This could potentially be a full-time job.
Yeah, I mean, you know, like anything else, as you continue to scale the business, if you are caught up still doing all the day to day, there's no possible way. Everyone hits ceilings in any industry. And the only way to break through those ceilings is to delegate and elevate. And in our case, what's been one thing we've been focused on, we love selling, but we stopped selling in 2015. We knew that we were good at it, but we were holding ourselves back in growth because we were still involved in the quoting of policies and selling. So over the years, we've been able to elevate ourselves to the point where for many years, from 2015 to 2018, really, those 3 years, all we were doing was business development and then leading, managing, and holding accountable our managers. So, you know, there's a lot of culture components there. There's leadership, there's strategic relationships and vision, et cetera. But majority of the time was really spent connecting people. Making intros via email is fine. It's not necessarily have to be in-person connections. Sending people digital messages and voice texts and FaceTime messages and such, it just allows us to leverage technology to make intros much quicker. And intros aren't necessarily all that people want too. I mean, that's a good example that I gave you, but some people like a loan officer who's really struggling with managing the pipeline might have a really inefficient process. Well, we've perfected our process design in a way at the agency that could be replicated in any business. And so we might sit down and they say that's their pain point. Then we might offer, hey, why don't we meet for a half hour, have a call or Zoom call or whatever, and we'll discuss how you could change your process and tweak it so that it's more of an accountability measure and much more efficient for you. And that might be enough.
Right. Now, how do you keep in touch with these guys and how often do you keep in touch with them?
Yeah, good question. So as I mentioned before, our top 20 partners, we're connecting with in some form or fashion once a week. Give you a great example. Yesterday, I have 10 that I'm in charge of, that I'm responsible for. And within 5 minutes, I was done. And I left every one of them a different voice text that allowed me to just send the text right off the bat, all voice related. And I was just yesterday, I was just checking in to see if they're on track for their quarterly goals, because they each have a quarterly goal that I'm aware of because I asked in December, effective April 1st, that they need to accomplish. And I just said, hey, real quick, Jim, just want to check in with you. And you told me about your April 1 goal. I know what it is. Here it is. I just want to check if you're on track. And if you're not, let me know. I want to help, like whatever I can do to help. And it took 5 minutes, 6 minutes in total. I connected with all 10. 6 of them got back to me right off the bat, said thank you. One of which actually had an action item. So I spent another half hour on that one. But most of them are just really appreciative to hear from me. That's super effective with your top level A partners. Now, we've got hundreds of others who refer us once a week, once a month, once a quarter, once a year. Social media works. It just does. We have a huge following on social, probably the #1 following in the country when it comes to insurance agencies. We did vlogging for 2 years with our videographer, where we had a full-time vlog with a weekly episode. We do a ton of creative, fun content and video online. We never talk about insurance because that's not something people want to hear about. They're not going to want to consume that, and that's all we care about, them consuming it. The more they engage with us and watch our content, the more our stuff is going to flow to the top of their newsfeed. So all we care about on the social side is to be presenting motivational, educational, or entertaining content so that people are thinking about us when they think of insurance, and that works. There's no substitution for doing a damn good job internally. And we haven't really talked about that, nor does, it's not really a topic. But if you're not doing a great job internally and your people aren't executing at a very high level on a consistent basis, your brand is tarnished pretty quickly. Your reputation goes down the drain. I don't care what business you're in, what you're selling, service or product. And there's no substitution for that. So there's got to be great people and an awesome process with a really good product and good pricing to support it.
Right. So you're saying for the 500 other referral partners you have, the ones who aren't in your top 20, you're not reaching out to them directly so much. It's more of a social media group
Yeah,
type
there's
marketing?
a lot of engagement on social. Like, so Zack and his team, they have to do 100 plus engagements a week. And it could just be commenting on a post.
Hmm.
That is an engagement. It could be a quick DM. It could be a quick voice text from time to time. It's not set in stone like it is with the top 20,
Hmm.
but we are connecting with everyone every week. And by creating and posting a couple times a day on different platforms, whether it be LinkedIn videos or Facebook messages or Instagram posts or whatever, we're staying top of mind in their newsfeed. If they have a success that they share online, on social, we're sharing their success as well. We're just promoting them and boosting them up. And so it's an ongoing basis. But it's not as measured from like here are the 500 people and we're going to make sure we contact every one of them.
Right.
Yeah, it's just higher level engagement with those who are doing a heavier volume.
Right. And just to circle back a little bit, you said for your top 20 partners, you connect with them how often now? Once a week, every week, or is this once a quarter?
Once a week. Once a
Okay,
week.
so
It could be a quick voice text. It could be
okay,
from time, once in a while. It could be a more in-depth
okay,
coffee or lunch.
yeah. So 1 week you check on their quarterly growth, the quarterly goals. What are you going to talk about next week?
Well, one that I left yesterday one gentleman who didn't talk about the quarterly goals, but just a good example. I said, "Hey, Rick, I noticed you posted a video yesterday of your son skiing with no poles. He's flying down the mountain, absolutely carving up the mountain in Stowe, and you can't even keep up with him. Like, how are you planning on keeping up with him in 2 years from now? Like, love to know, like, how often you guys go? Do you see him being a big skier down the road? Hit me back." And then I just sent it.
Okay.
These are people who we've built relationships with. I mean, the relationships are founded in business, but they're friendships too. I mean, these are people who we know them really well. And if we're just talking about business, it's a big miss. It gets boring.
Yeah.
So yeah, it's very personal. It's very vulnerable. It's very the more personal, the more topical you can be, the better.
Right.
And it's more interesting too. It's more authentic. I actually care about that. Like, his goals, I really care about too. But at the end of the day, like, I'm really interested in him and him being a great father and taking his son skiing down the mountain and how good his son is becoming at 8 years old. Like, I'm really interested in that. I'm proud that he's doing such a good job, and so that's the kind of stuff that's going to resonate well. And it's the stuff he cares about hearing about too.
Right. Yeah, you sound like you keep in touch with your top 20 referral partners more often than I keep in touch with my best friends.
Well, it works, and if you don't, it's easy to fall off. I just did a video yesterday, or we did our podcast yesterday that released yesterday, was specifically about that. It's like, what happens with people is that if we do a really good job with networking, all the behaviors that lead to the intended results, the desired results, the behaviors stop because we get so busy with all the inbound referrals and leads and sales. And so what happens is 3-4 months down the road, we're curious why our lead generation has dropped, our referrals have dropped off. It's because we stopped doing the behaviors. And so for us, what matters so much is tracking a few very specific, tangible, measurable numbers every week. And one of those is our top 20 engagements. If we always do that, we'll always be good.
Right.
Even if we don't create more relationships, which is impossible because that's another metric.
Right. For 2019, let's talk a little bit about what your plans are for 2019. And let's just imagine that we're having a discussion a year from now. What would you have to have seen happen in your business over the past 1 year for you to be happy with your company's progress? In particular, what's the number one problem you have now that needs to be eliminated? The number one opportunity you want to capture, and the biggest strength you have that you want to maximize further?
That's a great question, Malcolm. So, our business is coming up in January on 10 years, and we are more than ever focused on driving revenue, qualified clients that are going to be really sticky and stay with us for many years. But we have been more focused as of late at trying to be more profitable, because the more profitable we can be, the more we can reinvest in our team, the more we can, just be a stronger business in general. And organic growth is costly because it takes a ton of people and labor hours in order to fund that. And so what we've really been focused on the last year and moving forward is efficiencies and leveraging technology to be more efficient, of course, but also making sure that any waste in our process is eliminated. If we have things that can be removed, not people, but just steps in the process, great. If we can leverage more virtual assistants, we will. We have 8 right now in the Philippines, and we'll probably get more, but they're going to help us with a lot of the back-end data stuff that allows our current staff internally to elevate their game and do more proactive stuff with our clients. So being more profitable is really the end-all, be-all goal as a business. In order to do so, we need to continue to become more efficient internally. So if you fast forward a year, our growth rate, if we can maintain at 20%, in the next year, we're happy with that. In the past, we've been higher, but we've also been less profitable. If we can be at 20%, we're still outpacing the market by 6x in our business, and we'll be a lot more profitable than we are, the past few years. And it allows us to redeploy a lot of resources internally to just continue to thrive. If that answers your question.
It does. So there's a couple ways of being more profitable, right? One way is on the cost side. You can reduce your costs, but the amount of profit increase from that is finite, right? You can only squeeze out so much cost. And then the other way is to get more commissions, right? Whether it be from your existing clients or from new clients.
Yes.
Which way are you focusing on? It sounds like
all.
Okay.
Yeah. No, to be specific, we didn't sell life insurance for many years to our clients. We've got over 12 or 13,000 homeowners that pay their insurance premiums to us every single year, and they're going to continue. They all need life insurance. Most of them do, or disability and whatnot. And so we have already started, and we're going to be offering life insurance to every one of them. That's going to drive up ROI per client for sure. We're leveraging virtual assistants. We're leveraging the service center functionality at different insurance carriers to reduce future, like our set costs associated with payroll have always been at a certain number. For the number of clients we've had, we can reduce that significantly by just leveraging outsourcing and making sure that our carriers are doing a little bit more of the heavy lifting when it comes to the reactive based expected transactional type of work that the clients need. That'll help us be just more profitable internally. So we won't have to hire as frequent as we have in the past. And then lastly, like we've just improved a lot of our internal sales processes so that all of our metrics, like our number of policies per client, premium per client, sales cycle time shrunk. Everything is improving so that we can get more ROI on every single client. And then lastly, our business development functions that generate more leads are just more targeted. Our business managers just hyper focusing on the top partners who can really, be better ROI on their networking events.
Right. Now, do you find the leads from your partners are pretty steady? Because oftentimes the thing about referrals is that it kind of comes whenever they come, right? You can't really flip a switch and turn it on, turn it off, or dial it up further.
Yeah, I think if we had 5 or 6 referral partners, it would be a little bit more up and down, because we get such volume from such a high number of individuals who are all doing the exact same thing, which is helping home buyers. We're really tied a lot more to the real estate market. So I would say that December, January, February, and March are our slowest months, where we're probably doing about 70% of what we'll do the rest of the year. Whereas quarters 2, 3, and 4 are very strong because they're tied to the real estate market. But the way we look at it is like, a really good year in Massachusetts, 60,000 homes will be sold. A really, really bad year would be 40,000. And those that are selling the 40 versus the 60 are going to be a lot of the same individuals. So if we're networking and connecting with those people and still maintaining good relationships, they're going to refer us regardless. We're not going to feel a huge hit one way or the other.
Right. Okay. Now, you mentioned before you're selling to 12,000, 13,000 homeowners now. Many of them would need life insurance. How are you going to go about offering that to them?
Multitude of options. I mean, there's a little bit of passive based stuff you can do on renewal. Every single year, their policies come up for renewal. We are just going to build it in as a component of the existing process of engagement. So, if we're connecting with them to discuss their current policies and weaknesses and opportunities in their plan, well, this is a potential opportunity for them to increase coverage and do something they haven't done in the past, or check something off the list, their to-do list that they've had for a while.
Okay.
On this front end, on the sales end, we're onboarding 60 to 80 new clients a week. They're all homeowners. And so in the onboarding process, there's a lot of different components where we're asking them to review us online. We're asking them for referrals. We're doing a bunch of different things. So we're just going to build that in as, hey, here's proposals for $1 million 30-year term. Assuming you have good health and you're non-tobacco, non-smoker. If you're interested in this and you want to discuss more, let us know. We attach the proposals to make it really easy. And then, engagement. So far, early tests have shown that's really worked well. It's just made it really easy for people to say, yes, this is something I've been meaning to get around to. I bought my house 3 years ago and I've really been meaning to get around to doing this. I just haven't. And it's an easy kind of shift because we're already helping them with insurance. And so we're not, selling them something completely out of the ordinary.
Right. How about in terms of your past customers? Do you do much marketing to the ones who stopped doing business with you?
Those who may have left?
Yep.
Yeah, we have X-date campaigns. We have prior insured campaigns where there's reach outs, there's voicemail drop, there's text messaging campaigns, there's outbound calls, there's scheduling software we use. Just do a lot of heavy volume, low touch, just to drum up opportunities. And from time to time, we get to requote and revisit them. For us, if growth on the front end wasn't as hard, it was harder, I think we would spend more and more time engaging with clients that left. But if you think about it, it's like chasing, this isn't an equal fair comparison, but chasing a girlfriend that left you, opposed to searching one that really wants to be with you. It's kind of like somewhat similar. It's like they left you for a specific reason. And yes, you can win them back, but your efforts are almost better suited for those who are looking for your help moving forward. And if we're closing at 71% quote to close ratio on the front end with new home buyers, and we're closing at maybe 10 or 15% with people who used to insure with us and they left us because, I don't know, any reason, Geico, they sold their house, whatever. I would much rather our team allocate their time and resources towards the 70% versus the 10.
Sure.
But it is important to still engage and touch and let them know we're here. And if they're interested, we're going to quote them, because if we actually quote them, there's a good chance they'll move back, but not going to overexert ourselves.
Sure. Well, what's nice about the people who used to do business with, but you're not doing business with you anymore, is that you already have their contact information, right? And you have details. Sure. So in today's day and age, the marginal cost to reach out to them can be very low.
Very low. Very low. And so we have virtual assistants doing a lot of that work, just if they're reaching out to 100 people and 10 people get back and 4 people want quotes and 2 people move forward, it's worth it.
Yep. Now, what about the 39% who don't buy policies from you? What do you guys do with them?
So there are other campaigns we run that are quoted, not sold. So these are people who we quoted business for, auto, home, umbrella, whatever, and they just didn't move forward. Yep. They're still, all their information is still in our system, and we run campaigns very, very similar to those who used to be with us who no longer are. Very similar. So we're sending them a lot of different forms of communication to, especially on their renewal next year, if they went with another carrier, another option, we're connecting with them. Again, there's not as much of the traditional sales process or outbound kind of lead gen process in the industry, in our industry, is very much that. It's like heavy volume lead gen to get a few people interested, and then you connect with a couple, and then and that's a model that we've never really run towards, even though we encourage that internally to run those campaigns, because we are going to get some low-hanging fruit, but we're just so much focused on the people who need what we offer and are referred by a trusted advisor at right this moment, sales cycle time goes from like 2.5 weeks to 2 days.
Yeah.
And it's just like, it's like crazy. It's like, and there's so much of it. There's so much opportunity that we're not even capturing. So to put any really amount of effort elsewhere, it just seems kind of foolish.
Yep. I can see that.
Yeah.
Now, I guess that kind of goes in line with perhaps what your answer would be for my next question. I took a look at your online footprint. I'm not seeing any pay-per-click ads that you're running right now, at least on the tools that I have on Bing and Yahoo and Google. And I'm not really seeing a huge amount of SEO-related traffic going to your site. So what are your thoughts on that? Pay-per-click ads and SEO?
Yeah, I think, hey, if someone's looking for auto or home insurance and they're going on Google or any type of search engine for that matter, if we wanted to compete on that, it's one of the most expensive words on all of Google is auto insurance or insurance. So we'd be paying, spending a ton of money just to get that person. Couple problems with that. We never have as much money as Geico. Most people are searching more for auto insurance, and that's not necessarily who we want to attract. We want to attract the person buying the home because that's what our process really supports internally. And if they're the type of person who are shopping online to look for what we offer, they're going to be the type of person that continues to do that. And if we win and we save them $100 and they move over their policies, great, they're happy. Chances are they're going to continue that behavior, and next year they're going to do the same thing, and the following year they're going to do the same thing, or at least they're going to try it a couple times. And that isn't necessarily the type of relationship we want to have with our clients. We want clients that really value the coverage, the professional, outbound, proactive research and communication, the engagement, the experience, all in all. And so those who are searching online for better options, just Geico can have them. You know what I mean? And they can pay for them, and they will pay for them, and that's great. Like that's what they focus on. It's just that's such an expensive way to attract the wrong type of client for us. So it just hasn't been the direction we wanted to head in. But we know other businesses that have grown super fast with that kind of implementation, especially those who had a lot of capital to deploy.
Yeah. Well, I suppose if you look on a lifetime value perspective, right? Yes, you might be paying a lot for the initial customer acquisition. But then you make it all back on the back end, right?
Yeah, assuming you keep the client, personal lines insurance, you're making like $400 in revenue if you get the client. There's a lot of costs associated with the first year, so typically you're not profitable on that client for 3 or 4 years,
right?
Assuming all payroll and costs, everything associated with getting that client and then onboarding them. So they have to be on the business for 7 to 8 years in order to really turn a profit. And so if they're the type of person that really shops around and moves around a lot, like we're not going to be profitable on it. Whereas like maybe a commercial, like a large commercial shop that just focuses on massive clients that they want to get a client a quarter, the ROI makes a lot of sense. That might as well.
Yeah. I imagine that the calculations to assess the value of a client can be a bit complicated if you sell them, if the getting them on board on one product gives you the opportunity to sell them other things, right?
Very challenging to quantify that. Yeah. And it's at what point you want to just be the best in the world at one thing and say, you know what, we're not going to be the greatest at all these other things. And I don't think we're the greatest at a lot of stuff. I think that we have a lot of way to improve in other areas, but I'd rather just be known as like the number one go-to insurance entity when people are buying property. And that's it, and then if we can layer other services down the road, for sure, let's do it. And we are, but it's really hard to just strengthen brand if you're giving more than one message.
Yep. I hear you. It gets a bit complicated, especially if your messages are not supportive of each other. So. Yeah. All right. 3 final questions for you. If G&N Insurance had a billboard in Massachusetts on one of the freeways or turnpikes that are moving quickly, what would be that billboard message? And it has to be brief and to the point, right? Because people only have 6 seconds or so before they drive by it.
Yeah. No, that's a great question. Well, it would definitely be bobbleheads. It'd be the two of us in bobbleheads, and it'll probably be something along the lines of the Kayak of home insurance for home buyers. Just to kind of capture the essence of what we do in as short as possible, simplest message.
Right.
Kayak for home buyers.
Right.
Yeah.
Right. Kayak for home buyers insurance.
Yeah, insurance, Kayak insurance for home buyers, something along those lines.
Yeah.
But make sure that people understand that the value of offering options and shopping for them, opposed to them doing all the work, and then obviously the home buyers being the niche.
Right. And the last two questions: who are your ideal clients, and what's the best way for them to contact your company?
Yeah, our ideal clients are those that are purchasing real estate. I mean, it's simple as it could be. Those are the clients that are going to value our service. They're the ones we're built for internally, and they're the ones who, are going to find the best value in working with us. The best way to find us is just to go on our website, which is Insure with GN, Gold Nancy, insurewithgn.com. And we've made it really simple for people to start the process there. And a lot of people like to call us, and our contact information is on the website. So our entire team and everything else. So we can start the process online by uploading documents and making it super simple, or reaching out via phone or email, and our lead coordinator runs with it.
You also mentioned a video blog. Would you like to give details on how people can check that out?
Yeah, so Bobbleon, Bobbleon, Bobbleon is the name of our podcast. It's also the name of our vlog, and we run it through Facebook. We have a YouTube channel as well, but it's really through. Historically, has been through G&N. We created a separate entity called Bobbleon to really help insurance agencies across the country, like ours, do exactly what we've done in Massachusetts. And so, a lot of the moving forward, a lot of the vlog will be focused on helping other business owners across the country really amplify their revenue, increase their result, improve their results, and do what we've really done here in Massachusetts. And so Bobbleon is really formed to do that. But the podcast and the material we put out are all straight, tangible tips on how to improve marketing, how to improve branding, how to better network and drive in leads and build relationships. And so I think a lot of people that we've gotten, a lot of feedback, positive feedback from people outside the industry, because it's universal topics that we go over and tips and strategies. It doesn't have anything necessarily to do with insurance.
Awesome.
Yeah.
Matt, it's
thanks,
awesome.
Malcolm.
Yeah, it's been great having you on my show today. Really enjoyed hearing how you grew your company so fast.
Yeah, well, thank you for having us and highlighting us. Appreciate the interest, and what you're doing is obviously is great. You're creating the content and you're putting it out there for a lot of people to benefit from.
Yeah, it's a win-win-win-win, right? It's a win for my audience, win for your audience. It's a win for our businesses as well. So I think it's a good thing to do.
Cool. Well, it's really nice. For nothing else, it's nice that this has allowed me to get to know you a little better.
Yep, same here. We've been speaking with Matt Naimoli, the co-founder of G&N Insurance, about his company's rapid growth. For interviews with other fast-growing, high-value sales companies, or to learn how we can accelerate your firm's high-value sales through automation, visit eversprint.com.